Imagine a company so powerful it could wage war, build colonies, mint its own money, and rule entire territories. Now imagine that company did something even more revolutionary. It invented the stock market. Over 400 years ago, a single corporation changed the way the world finances risk, builds wealth, and invests money. Today, trillions of dollars move through stock markets every day, but the entire system traces back to one company in 1602. The company was called the Dutch East India Company, and its creation didn't just change finance, it helped create modern capitalism itself. To understand why the stock market exists, we need to go back to the age of exploration. In the late 1500s, European powers were obsessed with one thing: spices. Nutmeg, cloves, and pepper were incredibly valuable in Europe. Some spices were worth more than gold by weight, but there was a problem. These spices came from islands thousands of kilometers away in Southeast Asia. Getting them required multi-year voyages, enormous ships, huge crews, and massive amounts of money. Most voyages failed. Ships sank, pirates attacked, crews died of disease. Investing in a trading voyage was basically a financial gamble, and for centuries, merchants solved this risk in a simple way. They financed one voyage at a time. Investors would pool money into a ship, and when the ship returned, the profits were split. Then the partnership dissolved. But this system had limits, and by the late 1500s, Dutch merchants realized they needed something bigger, something permanent. In 1602, the Dutch government merged several competing trading ventures into one giant company. That company became the Dutch East India Company. It was unlike any business the world had ever seen. They had a 21-year monopoly on Dutch trade in Asia, authority from the government, and powers normally reserved for states. The company could wage war, negotiate treaties, establish colonies, imprison enemies, and even mint coins. But its most important innovation was financial. Instead of raising money for one voyage at a time, the Dutch East India Company asked the public to invest in the company itself. Anyone in the Dutch Republic could buy shares. For the first time in history, ordinary investors could own a permanent piece of a global corporation. This was the world's first public stock offering. In 1602, they launched what we now call an initial public offering. Investors subscribed to shares in the company. More than 1,000 investors participated. They raised millions of Dutch guilders. In return, investors received ownership in the company, a share of future profits, and the ability to sell their stake to someone else. And that final detail changed everything. Because if shares could be sold, then investors needed a place to trade them. Soon after they launched its shares, trading began in Amsterdam. Investors started buying and selling their ownership stakes. This activity led to the creation of the Amsterdam Stock Exchange. It became the first modern securities market in the world. At first, trading happened informally. Merchants gathered in public squares and coffee houses. Deals were negotiated face to face. Once two traders agreed on a price, the transaction was recorded in the company's official books. For the first time in history, ownership of a business could be bought and sold freely. A secondary market had been born. Early investors in the Dutch East India Company weren't just merchants. They were artisans, shop owners, wealthy families, and city officials. This was revolutionary. Before the stock market, large business ventures were limited to the wealthy elite. Now, the public could participate. And once trading began, investors quickly realized something. You didn't have to hold the stock forever. You could sell it whenever you wanted. This liquidity made investing dramatically more attractive, and trading activity exploded. As trading increased, something else appeared: speculation. Investors began buying shares simply because they expected the price to rise. Some investors even tried to bet against the company. One shareholder named Isaac Lemaire is believed to be history's first short seller. He attempted to profit by betting that the company's stock would fall. Sound familiar? Incredibly, many financial behaviors we associate with modern markets already existed in the 1600s. Short selling, speculative bubbles, derivatives trading, shareholder activism. In fact, Dutch East India Company investors even organized protests demanding transparency from management. The first recorded shareholder revolt happened in 1622. Corporate governance debates had already begun. They weren't just a financial experiment, they became one of the most powerful companies in history. At its peak, the company controlled trade routes across Asia, large parts of modern Indonesia, and ports across Africa and India. It operated hundreds of ships and employed tens of thousands of people. Many historians consider the Dutch East India Company the first multinational corporation, and its scale was enormous. At one point, estimates suggest the company value would be equivalent to trillions of dollars today, all funded by public investors. But their story also has a darker side. The company built its empire through colonization, military force, exploitation of local populations. Entire islands were taken over to control spice production. Competitors were eliminated, and local economies were reshaped to serve European trade. The same financial innovation that created the stock market also powered a massive colonial system. It's an uncomfortable but important part of the story. Despite its success, the company eventually began to decline. By the late 1700s, corruption increased, military costs grew, and trade competition intensified. Debt piled up. And in 1799, the Dutch East India Company collapsed. The Dutch government dissolved the company and took over its territories, but the financial system it created did not disappear. Because by then, the idea of publicly traded companies had spread across the world. The innovations created by the Dutch East India Company still define financial markets today. The company helped establish public share ownership, stock exchanges, secondary trading markets, corporate governance, and modern investor capitalism. From Amsterdam, the model spread to London, then New York, and eventually the entire world. Today, global stock markets are worth over $100 trillion, all built on the same basic concept, created in 1602. So when you buy a stock today, whether it's Apple, Tesla, or an ETF tracking the S&P 500, you are participating in a financial system invented more than 4 centuries ago. The idea that millions of people can collectively fund companies, share risks, and trade ownership freely was once a radical experiment. And it started with a trading company chasing spices across the ocean. The Dutch East India Company is long gone, but its legacy lives on in every stock trade, every IPO, and every investment portfolio. It built the first stock market, and in doing so, it helped build the modern financial world. If you found this story interesting, subscribe for more deep dives into the history of money, markets, and the events that shaped modern finance. You're watching Narrated Finance.